Folks, you have been waiting for this. Where is the opportunity? Greg Dickerson is going to share with us where he is looking today, where his broken crystal ball says the future might be. Greg, how you doing?
Doing great, Michael. Good to see you.
Nice to see you as well. I know I would like to know, and my audience would like to know as well. You have been so right about so much. You've always told us good times never last, bad times never last. I think it's fair to say we're entering a bad time. But as you've told us over and over, that's where true opportunity, that's where wealth can be built. So where might you be looking for opportunity? Where might you suggest others at least start to get a little bit more educated, learn, and look for opportunity? What are you seeing?
Yeah, opportunities are found everywhere you look for them. So, in the markets, as markets are, trying to base and bottom out, at some point there'll be generational moves that could be made in the markets, like we saw in '09, like we saw at the bottom of 2018, and like we saw at the bottom of 2020. And there's been moves along the way here, in some of these ranges. I mean, I snatched a nice little 68% return on First Republic the other day. And,
Nice.
But that was a gamble.
That was
I'm
a
not
trade.
advising anybody to do it.
It was a trade. Yeah.
That was a trade. It was a huge gamble. They could have, they could have gotten closed and I could have lost everything, but it worked out and I was willing to roll the dice. And, I used a sum that I probably shouldn't have used, but, it still worked out. I would have felt that if it didn't work. That
There
would
you
have
go.
been a kick myself in the pants, but I almost doubled my money in 2 hours. So
Nice.
yeah, so that one was worth waiting for. And so there's opportunities in the markets. There's going to be opportunities in crypto, once the dust settles and things kind of level
Yeah,
out.
you know what? Let me ask you about that. It's something I don't follow. You do. Again, you have an amazing YouTube channel where you talk about it a bunch. Bitcoin has been on a run, and I think what's happening is some people are taking money out of the bank and moving it into Bitcoin. Is that just naive, or is that actually happening, you think?
Not like the average everyday person,
No, but
and that's
someone.
not really what's going on. Bitcoin's a risk asset like anything else. So,
Okay.
the market makers and exchanges and big investors are pumping it to the narrative of what you just
Okay.
said.
Oh, got
But
it.
again, there's not enough people that can do that at scale to drive the price that much. There might be, some companies that might be moving some of their treasury, some investors moving some of their treasury into it for the short term. But at the end of the day, the markets have been up, gold has been up,
Yeah,
and
gold's up. Yeah.
Bitcoin all across the board, pretty much the exact same price action, incremental amounts. And Bitcoin's been kind of sitting the party out when the markets have been rallying, so it's just kind of catching up. And then there's a whole narrative by the manipulators in the market, because it is a highly manipulated asset, just like markets are, to where they're pumping up that narrative. Store of
Right.
value, banks are failing, put all
Yeah.
your money in Bitcoin. So there might be a little bit of FOMO going on in there, because everybody's calling for new all-time highs and the bull market is on
Yeah.
and all that, which it could be. I'm not saying it's not for Bitcoin. I mean, this could be a proving point where Bitcoin's case is finally proven, use case is finally proven out potentially. So that opportunity is there, and there is an opportunity in Bitcoin. I mean, if you bought at this level, if it went down, it's going to come back. Most likely. There's no guarantees. So that's a good potential store of value for a lot of people right now. Gold has been up like crazy. I'm not sure what it's doing right this minute, but it shot up.
It was up this morning. It's getting really close to 2000. What I saw happening, and again, um, I think the average person confidence in the bank was lost a couple of weeks ago when all people heard was my deposits aren't safe. So it didn't matter if you had 5 grand, 50 grand, or 500 grand. You were in a rush to get your money out of where you are. And some people bought Bitcoin, some people bought gold, and some people bought treasuries, but they got the money out of the banks. That was
and
right or
that's where the
wrong.
bulk of it went. So the bulk of it went to other banks and treasuries and money market accounts, not Bitcoin, crypto, and stocks. Some went in there. The pump is the Fed pivot narrative. That's what the pump's all
it's
about.
coming. Yeah,
The
Fed
markets
cut
are
by July.
pumping
Fed cut
because
by
as
July.
soon as they jumped in on SVB, everybody called it a bailout. They said, that's it. The Fed's going to cut rates. It's all over. The banks are collapsing. They're going to step in and they're going to start QE all over again. So that's why markets are pumping, because of that narrative.
Yeah.
And, we're going to find out if that's true when the Fed, when Powell speaks on Wednesday. It could be true. And if it is, the markets, it's going to be hard to say what's going to happen with the markets if he's done and says, hey, how they'll interpret that. But at the end of the day, if they started cutting rates and really juicing the markets, they would pop for a little while, but then just like back in 08, 09, the market bottomed after, they pivoted. So markets typically bottom after they pivot. So they might go test lows again and then bounce from there. But that's all this is. This is a Fed pivot narrative, a QE narrative. because a lot of people were calling what the Fed did with the banks and Treasury. They're calling that QE, and it's not. People are saying, all this liquidity is pumped in the market. Some people are saying the banks are buying Bitcoin. I mean, it's just, the average person did not go take their money out of the bank and put it in Bitcoin. No. They're absolutely not going to do that. What they did was they went and put it in money market, they put it in treasuries, and they put it in other banks.
Yeah, they got it out of the banks or the big four. I mean, Bank of America, I think I read somewhere, went up $160 billion in deposits in 4 days.
Yeah, that's where the money went. The average person's just not going to do that. So anyways, there's opportunities there. And, a return to all-time highs in Bitcoin is probably very likely. It's very probabilistic this year, next year, who knows? Stock markets return to all-time highs. It's potential. Some people say it might be 10 years. Who knows? It all depends on the economy and what happens. But what I do know is there's a lot of stress in the real estate market. There's a lot of stress on businesses, and there's a lot of people retiring. So, other opportunities are going to be businesses taking over businesses from people who are retiring, because you can get them 100% financed. You don't have to put any money in them. You can roll them up and combine them and create a nice little exit. And then real estate, same thing. There's going to be a lot of distressed sellers where you can just step in and take those things over. There's going to be a lot of people that have 2 to 3% interest loans on their primary residence. You can step into that and either, use it, rent it, do whatever. So, those are where your big opportunities are going to come. The key is you got to make sure that we're through the potential disaster that we're facing right now. This is not the time to be taking moves in the markets, moves in, crypto, but it is a time to be taking moves into real estate, moves into, businesses if they work, right now and look like there's, potential upside.
Yeah, one of the things I love about our conversation, it really goes back to my aha moment from like 3 years ago when we were talking every week, was the Rich Dad Poor Dad book, right? I read Rich Dad Poor Dad. In fact, after our discussion, I read it again, and I still come out of that damn book thinking like Robert and Kim buy real estate. You read the book and you want to be Rich Dad, and you did that in real life, right? You bought businesses, you rolled it up, you added, and you've always told this audience, right? Being an entrepreneur, roll up businesses. I think you're absolutely right. Another person I'm following lately is Cody Sanchez, I think her name is. Mm-hmm. She's talking about going and creating a baby Berkshire Hathaway. I think that is such an awesome idea. 100% financing, direct from the seller. It's easier to take over a business than create one. It's got customers. It's got all of that. Just tell us more about buying businesses, evaluating business, because I think there's legacy wealth to be built in this crisis with that mindset.
Yeah. So it all goes back to a motivated seller. There's a lot of people that are aging out of their companies and ready to retire, and there's nobody coming up behind them, because that's again, the manufacturing service industries, whether they're home services, B2B services, B2C services, people are not going into those fields. So there's some great businesses out there that, different levels, $1 million, $5 million, $10 million EBITDA, type companies that you can step into, and the owners will finance you because there's no other buyers, and they're just looking for, a good solid retirement and to,
they want cash flow monthly. They don't need a check.
So you just got to find out, what you got to find motivated sellers and look in areas where, you can either roll up other complementary ancillary businesses like I did. I was a general contractor builder. So I rolled up a bunch of service-based businesses that were complementary around that. And then I had some that weren't. I had some retail restaurants and a, gymnastics, trampoline, cheerleading school. That was a passion project and helping somebody, but still it was a good business. So those are the types of things you want to look at. And then your skill set, what are you good at? What are you interested in? What can you run? Because at the end of the day, you got to be able to lead people. If you're not going to be an owner operator, you have to be able to find a good operator, and you got to be able to lead that team and continue to run. So you need to understand the numbers and the economics and marketing and all of the components that go into that business. And then think about what are the essential businesses that did well during and through the pandemic and are going to continue to do well in a recessionary time and an economy. And those are generally going to be like service-based businesses, the things that you need, the core goods and services that you've got to have to sustain life. That's where a lot of your opportunities are. And Cody Sanchez is good. She talks about a lot of, really neat, interesting, different kinds of businesses that, you can get into very easily. And a lot of them are just the simple boring service businesses that people aren't even thinking of.
Car washes, laundromats, just things like that. So I think it's a wonderful
car washes are becoming more and more popular. Why? Because it's a convenient service. It survived in the pandemic. You don't need labor necessarily if they're automated, so laundromats, same kind of thing. Now there's nuances and, all those different, things that you need to know that goes along with it. You need to know the business, the numbers, and, all the, data and details around it. And, a car wash isn't going to work just anywhere all the time, so
Right.
you gotta be aware of that. But, you want a cash generating machine that's going to, continue to throw off cash in any economic environment or situation. People might say, if we're in a recession, nobody's going to go to a car wash their car. Sure, they will. Everybody has money in all economic cycles, or people have money in all economic cycles and will spend money in any economic cycle. You just got to make sure that you know who your audience is and that they have money and that they'll continue to spend it.
Yeah. So, it's obvious. We talked about in episode number 1, the crisis we're in, banking crisis. I'm going to use a sports analogy because I'm not sure how else to do it. A baseball game, 9 innings. What would you say? Are we in the first, second inning? You think we're further along? Where do you think we might be at in this environment?
Well, so most economists and analysts don't think we've hit stage 3 in the market business cycle. Stage 1, stage 2, stage 3, stage 4. So most people don't think we've hit stage 3 yet, that we're just coming out of stage 2. So that would be second inning, or second base, or however you want to put it. And I would agree. So again, if you go back to,
so we're really early.
Yeah. So if you go back to 2008, the banks started failing about this time, right as the markets were coming over the cliff. We hadn't even dropped yet. That 2009, a year later, is when Lehman failed and the big shoe dropped. So yeah, we're just on the beginning cusp, and it's a really interesting, delicate time, right now, because of where we're at with inflation, where we're at with, monetary policy, where we're at with the banks. I mean, we're on this thin ice where one little crack can take the whole thing away. And then you go off and you get that big flush and you get a big reset. But I think what the consensus is, and there's a great video out there on YouTube about the whole liquidity pump that we've seen over the last couple of years. I'm gonna look it up while we're talking, that goes over what's been done over the last few years pumping. It's called, hang on, where'd it go here? I'll find it. One second. Oh, here it is. The Age of Easy Money. So look up The Age of Easy Money. It's a Frontline PBS documentary called The Age of Easy Money. And what it's doing is it's interviewing anybody and everybody that would have been around this since 2009. This whole QE, zero interest rate, and more specifically recently, just came out like a week ago, really in depth, where they're talking to Neil Kashkari and former Fed members and everybody who was on the inside of all this, and Nouriel Roubini and all these people. The consensus is the bill's due. We've been pumping, juicing, pumping, and at some point, trillions of dollars that have been put into the economy has to unwind and come out. Values have to get reset. But on the other hand, there's trillions of dollars out there that needs to stay at work and go to work and be put to work. So it's really tricky, how this thing comes out.
One of the things I love that you said there that I don't think a lot of people remember, and this is actually about the Great Recession. Somebody can check my data points, and I know somebody will, but I believe Bear Stearns failed first right around this date in history, March 23rd or 18th or something like that.
Yeah.
And then
it was actually the same weekend that SVB failed.
Right, almost to the day, right? And then Lehman Brothers, which was the next big bank. Most people think those things happened close together. They were actually 6 quarters apart. Yeah. One was March of, I think, 09, and the other was, or 08, and the other one was September of 09, I believe. Or they weren't together. A lot of people think they happened like in the same month. These were
Lehman was almost a year later in September 2009. So March 2008 to September 2009.
Yeah, so 18 months.
The bottom was March of 2009. So you were still 6 months, to the bottom of the market. September. Yeah, 6 months.
Yeah. So this is why it's important. I keep telling people this. Everybody thinks it's going to be like a Wile E. Coyote moment where it just falls off, and they all think it's the COVID recession again. They all think it's a V-shaped recovery. Like, no, all of this takes time.
Rightfully so, because that's what the Fed has shown everybody in the last several crises. So once we finally bottomed in 2008-9, it was off to the races then.
Yeah, but it took 3 years to get there.
2017, 2018, they tried QT and they tried to unwind,
Q4 18,
bottom out, and the pandemic, bottom out. But that was a fire hose cannon of trillions of dollars.
Yeah, that was overkill.
Zero interest rates and all that. And even then, it took a while for all that to really trickle in. That still lasted. Well, it happened in about a year, so actually it wasn't that bad. But I think, you have to get, but that's the thing. There's so much money that's been created, and the Fed can't really suck it out of the system. The only way to
It
suck it
can't
out of
do
the
it that
system is
fast. Yeah.
you got to tax it out. That's the only way you can suck it out of the system. So the question is, where are we going to base this time, and where does it go from here? That's what's fascinating, and that's where your opportunities are, because we're going to base higher. Obviously, some people are calling for a return to, I think, 2000, yeah, probably 2009 lows. Some people are, and even beyond that, some people
In
are
the
calling
stock
for,
market,
yeah,
2009.
oh
Oh,
yeah, some
wow.
people are calling for a return back to the base of 2009. I don't know if I agree with that, but I think we're going to reach a base at some point and then go from there. And I mean, nobody knows. What I do know is there's a ton of money in the system, and there's a ton of money that needs to allocate, needs to go to work. Life insurance companies, sovereign wealth funds, debt funds, pension funds. I mean, they have to pay dividends. They have to pay, pension payments. They have to pay, their investors. So there's a lot of money out there that has to go to work and needs to allocate. So when you have that and you've put all these other trillions of dollars on top of it, that money's got to go somewhere.
Yeah. Wild times. Well, Greg, I appreciate you coming back for these 3 great discussions. Where can people find you?
Yeah, gregdickerson.com. That's where all my info is. Go check it out.
Thank you, buddy.